Is gold getting ready for a 4th of July party that nobody's expecting? In today's video, we're going to take a look at the gold chart, which obviously then influences silver as well. We're going to talk about the really important levels we need to pay attention to in the charts that will signal us, okay, something is seriously changing and it's not just a dead cat bounce, a rebound. We're also going to look at a factor that is really important for you to pay attention to today and then obviously after the 4th of July weekend, in the next trading days next week. What is happening there? Because if we see a shift in this, then we can really start to think about gold is bottoming. Let's get right into it. Important show today. A lot of background facts, but these are the things we need to know to be ahead of the markets. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome. My name is Daniel Helmy. Quick housekeeping note before we're going to jump right in. So tomorrow, as you know, I'm going to be on a plane to Miami to the Rural Symposium. Quite excited about it. Well, about Miami and about the Rural Symposium. You're going to get tomorrow a video about oil, and I give you my thesis, what's going on in the oil market. That is important if you are a precious metals investor, especially gold. Because we know, we had this gold oil trade that was now unwind. And B, it's because higher oil prices, inflation, gold correlation, we get it. And then obviously interest rate hikes and cuts. So that's tomorrow. Saturday, hot dividend winners. New dividend stock. It's going to be healthcare biotech. Have you seen the biotech sector yet? And do not say a word that you didn't know this was coming. I remember, must have been like 2 months ago now, or 2.5 months ago, I did a video here and I said, watch out for biotech. Well, it's paying off now. That is the advantage that you have here with Hot Trades of the Day. We're ahead of the markets. If you're new, press the subscribe button real quick so you are ahead of the markets with us as well. That said, let's jump right into gold. Okay. Weird day yesterday, but looks good so far in Asian European trading. However, as you can see here in the chart, nothing has happened yet. Yes, we are making higher lows. Well, so far. That is cute because it's basically just the second day. But overall, there's no denying we are forming structure here below 4,000 and this zone that I pointed out in the previous video, which is very clearly very important to the market, which is around 4,072, 75-ish. So once we break above this zone, which we tried yesterday, and I'm going to get to this long wick here in a second, because this is important. The short-term gold rebound will gain significant traction. However, that does not mean that we have seen the end of the gold correction. Yes, we have broken the downtrend that has been in place since mid-June, but we had the same thing happening here just a few weeks earlier. We broke the downtrend, woohoo! Then we went up and doinked right off the downtrend that has been in place since the beginning of March. Well, we know why that is, because that's when the Iran war started. And then obviously took a leg lower. So breaking the downtrend is nice. Doesn't tell us much yet. Also, breaking 40, 72, 75 is nice for sure. But the real interesting zone is obviously right here around 4,215. This zone that I had defined weeks ago that paid off really good and was accurate. And then obviously double resistance with the downtrend, the now medium term, some would even say long-term downtrend. I usually find long-term after 6 months, so we're almost there, or we're getting there. When we break this resistance zone, that would be the first big signal that something has changed, because we haven't been able to do that on the close at all. We doinked off it here and here and here and here again. So that's 4 times. That's a strong downtrend. So we break it on the close, and therefore also close about 4,215. Now we're talking. Now that doesn't mean that anything has changed, because we're still below the 50 purple line. We're still below the 200 golden line. We're still below the uptrend green line. We're still below this resistance and all support zone. Well, it's the former support zone, now resistance zone. But that would be the first sign. Anything that happens in this vacuum here kind of means nothing. It would be nice to have, but if we look at the big picture of gold, this is not important. What's more important for us is that we get the probabilities in our favor. Here's the most interesting point that we need to pay attention to. And that is what happened yesterday. You see this candle from yesterday that had a really long wick. So what happens, and this happens quite a bit in the precious metals markets, Wall Street knows that the Europeans are much more interested in gold investments than the majority of the Americans are. If you've seen the latest numbers of family offices and money managers from, I think, JP Morgan, I'm pretty sure it was JP. In the US, it's like 75% don't hold any gold or any gold stocks. So in Europe and in Asia, gold has a very, very different standing. Now, Wall Street knows this, so what do? They push up the price. They push up the price the closer it gets to US trading, and all the Europeans are panicking, and they're like, oh my God, shock horror. The gold price is breaking out like it did yesterday, right? Jumping around that 40, 70 to 75 area. I need to jump in. And then what did we see yesterday? I'm going to switch to the minute chart just to show it to you, because this is important to understand. So here's June 1st on a 1-minute chart, and you see very well how we sold off in Asian trading. That was the tail that you see on the daily candle. I've told you before, we're going to see the lows usually in Asian trading. Then European trading picks up, and look at what happened right around 3 to 3:30 European time. So that's 9 o'clock in the morning to 9:30 New York time. The gold price just goes up. But then what else do we see? Just continuous selling, especially in the last hour. What did I tell you what you need to pay attention to? You need to pay attention to the last hour of US trading. That's when the institutions get active, because they don't really care if they miss a few cents on a trade. What they care about is what are the probabilities, where the probabilities the highest, what do we really want to do, where do we want to move the markets. So we saw massive selling in the US, especially in the last hour, pushing down the gold price. So that is our hint. That is the hint now where we can see if things are really changing. What are the Americans doing? What are the institutions on Wall Street doing? So we need to pay attention to what's happening with the gold price in US trading, especially in the last hour. If we start to see buying, continuous buying in US trading, and specifically in the last hour, that's when we know, oh, something is changing in the market. That is the indicator that I'm going to pay the closest attention to in the coming days and weeks for gold. Obviously, also for the dollar, which is going down today. Reason being is obviously, well, oil prices going down. We're going to talk about it in tomorrow's video. Hit the subscribe button so you don't miss tomorrow's video. It's going to be have a lot of geopolitical aspects in it that are important as well. So oil is going down, therefore probability of rate hikes going down, probabilities of unchanged going up, rate cuts maybe even going up. Trump definitely needs it, that's for sure. After the Iran fiasco, he needs something good to happen. So that is moving gold short term. But really, again, nothing is changing until we break this double resistance zone. And if we doink off it, the downtrend again, very likely we're going to see something like this. And then hopefully with a flush sell, and not like this with a slower burn sell-off, because this is not what I want to see. If we want to get back on the horse with gold, we want to see a fast panic sell that flushes out the weekends, and then we're good. And then we're going to be building structure. This right now, if you look at it just from the middle of June, really looks like a bear flag right now, right? Here's the downtrend, here's the bear flag, here's the downtrend. Now, again, that doesn't trigger until we close below 4,000, as I told you before, this lower purple line, or if we break above it, then we're going to move up. So, what does that mean for me? Maybe for you, I don't know. I'm not your financial advisor. Well, I'm going to sit and wait. And if you say, man, Schnitzel guy, come on. What's up with you lame Germans? All right, give me some action. I say, I can give you action, plenty of, but I'm not so sure that that has a lot of higher probability of hitting and making you money. Again, I've quoted this before, but it's really important. About 20 years ago, pretty much to the day, I was sitting down with Jim Rogers in Vienna, in Austria. Beautiful city. If you haven't visited it, I can highly recommend it. Book a plane ticket and go and see Vienna with one of your best friends. That is a beautiful place to be. And Jim Rogers said to me, I asked him, what should investors do? And he said, Daniel, most of the time, investors should do nothing. They should lay at the beach and enjoy the sun and the ocean, and then wait for the really good buying opportunities. And that's what we have been doing at Hot Trades of the Day, because who am I, right? Some sauerkraut eating, clearly not being capable of playing football, German guy, trying to say that, oh, well, I'm smarter than Jim Rogers, one of the best commodity investors that has ever lived. So we try to implement and learn from these masters of the markets. And guess what? If we zoom out, this has been the exact right strategy so far. Right? And this is why these videos, to me, are actually more important than the action videos. Because I know how hard it is in the markets to be patient. But I'm going to leave you with this, and then I hope you're going to be ready to throw some shrimp on the barbecue to celebrate your 4th of July. Wall Street is not our friend. If you would hang out in Wall Street like I do when I'm in New York, and you would hear how the bankers talk about the retail investors like you and me behind closed doors when the camera's off, yeah, you would know that we're just good enough for them to take our money and to have them pay their bonuses. So, this is not a win-win situation. If we win something while they win more, they can live with it. But overall, not a win-win situation. So we need to focus on what advantages do we have that the institutions do not have. One of them is, for example, we can invest in smaller companies. Another one is patience. Wall Street, just because of the way it's constructed with its bonuses and its quarterly reports, cannot have patience, but we can. So we would be stupid not to use that to our advantage. That was it for today. We'll see us tomorrow. Have a great day. Bye-bye.